Hi, this is Arun from FSK. Today I'm going to talk about a very secret topic in the field of real estate. Before watching this video, if you haven't watched my previous video on what are 3 types of income you can generate from real estate, I'll put link somewhere in the upper corner. Please watch the video and come back to this video so that you have a better understanding and better clarity. So the topic for today is how you can make crores and crores of rupees in real estate or millions and millions of rupees in real estate and pay zero tax legally to the Indian government. I repeat, how you can make crores and crores of rupees or millions and millions of rupees in real estate and pay zero tax legally to the Indian government. So this video is going to be absolutely crucial because even if you make just 2.6 lakhs per annum, you have to pay 5% tax to the Indian government. Or if you're making more than 5 lakhs, you have to pay 20% tax to the Indian government. Or if you're making more than 10 lakhs, you have to pay 30% tax to the Indian government. That's very huge tax slab rate, right? But in particular part of real estate, even if you make crores and crores of rupees or millions and millions of rupees in real estate, you don't need to pay any tax to the Indian government. So this video is going to be absolutely crucial. So stay tuned, stay happy and stay brisk. We're going to learn something very new today, and also we're going to uncover the great secret in the field of real estate. So stay tuned with FSK. Okay, let's quickly move on to the topic. How we can make crores and crores of rupees in real estate and pay zero tax legally to the Indian government. This can be made possible through a system called Section 54 or capital gain reinvestment. There are other sections like Section 54 EEC and Section 54F which involves with other capital asset. I am talking about only Section 54 in this video. So I'm making clear about that. I'm talking about only Section 54 in this video as it involves only with residential property. As FSK specializes in residential property, and majority of the Indians, if they are investing in real estate, is going to be only residential real estate. So I'm talking about only Section 54 in this video. If you want me to make a video on Section 54 EZ or Section 54F, which involves other capital assets like commercial building or land or plot, if you want to talk about that, then please comment in the bottom. I'll make a separate video for you. This video, I'm talking about only residential real estate. Residential real estate, which means flat or villa or any house. It has to be a house or flat or villa. This is called residential real estate. So I'm talking about only Section 54 in this video. So if you want to make use of Section 54, you have to satisfy 3 rules before making use of Section 54. Let me go one by one. At first, the rule number 1, it has to be a residential property, not a commercial property or a land. So in Section 54, it is only available for residential property. It can be flat or villa. That's the rule number 1. The rule number 2, it is available only to individual or HUF tax assessee. Individual tax assessee like you and me, or HUF, that's a family tax system. It's not available to private limited company or public limited company or LLPs. It's available only to individual tax assessee or HUF tax assessee. Number 3, it is available only to a long-term capital gain asset. That means the property should be held at least for 2 years before you sell the property. That's called capital gain, long-term capital gain property. So if you don't know what is short-term capital gain property or long-term capital gain property, I'll make it simple for you. Short-term capital gain, that means if you buy and sell within 2 years, that means if you buy and sell within the period of 24 months, it's short-term capital gain. If you buy and sell after 2 years, that means after 24 months, that's called long-term capital gain. I repeat, short-term capital gain within 24 months. If you buy and sell within 24 months of time period, it's called short-term capital gain. If you buy and sell after 24 months of time period, it's called long-term capital gain. So this is called short-term capital gain and long-term capital gain. So these are the 3 rules. I repeat, at first you have to be an individual tax assessee or HUF tax assessee. It has to be a residential property. That's a rule number 2. Number 3, it has to be an long-term capital gain property. These are the 3 rules you have to satisfy before making use of section 54. Okay, let's go to an example so that you understand better how you can make section 54. For example, in 2008 you are buying a property for 20 lakhs. Okay, let's take 20 lakhs for easy understanding. In 2008 you are buying a property for 20 lakhs. In 2018 you are selling that property for 1 crore. In the 10 years of time frame, you made a profit of 80 lakhs because 1 crore minus 20 lakhs is 80 lakhs. So you made a profit of 80 lakhs. But in the beauty of real estate is that even if you make that huge profit, before applying section 54, there's another tax benefit to you. It's called cost inflation index, which is available exclusively only for real estate. That's why I love real estate, particularly residential real estate, so much, because there are many tax advantage like section 80C or section 24, which involves with EMI, home loan EMI system, section 80C and section 24. Then you have cost inflation index, which I'm going to talk about now, and you have section 54. So let's talk about cost inflation index now. For the property you bought in 2008 for 20 lakhs, now the property is around 1 crore, you made a profit of 80 lakhs, but you don't need to pay tax for the entire 80 lakhs because you can make use of cost inflation index before applying section 54. What I mean by cost inflation index is nothing but, if you go on Google, this will be a lot of data, but a lot of data to understand, but I'll break it down for you. You can reduce the inflation rate which was prevailed for 10 years time period from 2008, and from 2008 to 2018 there will be inflation, right? In Indian inflation, you can reduce that inflation rate from the overall profit. So that's the formula for that, which is given by the Indian government, and there's a tabular column to apply for that. It's not a very complex formula. I'll put the formula and the index data, how to calculate that cost inflation index. You don't need to worry about that. There are so many online calculators available to calculate cost inflation index. I'll put a link in the bottom. You can feed the data that 2008 you brought for 20 lakhs, in 2018 you are selling for 1 crore, the profit is 80 lakhs. If you feed the data in that online CII cost inflation index calculator, it will come around 58 lakhs. From 80 lakhs, the profit now becomes 58 lakhs after applying cost inflation index. The gap of 22 lakhs, do you know what's that? It's the gap of 22 lakhs, do you know what's that? It's the inflation rate. So you can reduce that inflated amount over the period of 10 years by using cost inflation index, which is legally provided to you by the Indian government. That's the beauty of residential real estate. So now the profit is 58 lakhs after using cost inflation index. For 58 lakhs, for long-term capital gain, you have to pay 20% tax to the Indian government. So the 58 lakhs, if you put 20% tax slab rate, so it comes around 11.6 lakhs. Let's take around 12 lakhs for easy understanding. So I repeat the overall example. At first you brought a property for 20 lakhs in 2008. Now we are selling the property for 1 crore in 2018. The gap is 80 lakhs. You don't need to pay tax to the entire 80 lakhs as profit. Before applying section 54, you can apply cost inflation index. It's a formula. There are so many online calculators available for you. You can feed the data and reduce the amount of inflation which was prevailed over the period of 10 years. So the 80 lakhs now become 58 lakhs. So for the 58 lakhs alone, you have to pay tax to the government. For 58 lakh, it is a long-term capital gain property. So the 20% slab rate comes around 11.6 lakhs or 12 lakhs. For the entire 12 lakhs, if you want to escape from taxes of entire 12 lakhs, now we can make use of section 54. But the section 54 is called the entire 58 lakhs has to be reinvested in another property. If you are escaping from tax, that's not mean that you can take the money and go home. It's not like that. You have to reinvest in another residential property. So there are 3 rules how we can escape from paying a tax of 12 lakhs to the government. So the 3 rules are, at first, the property has to be reinvested. The 58 lakhs profit has to be reinvested 2 years after the sale. If you are selling in 2018, the 58 lakhs profit has to be reinvested in another property within 2020. 2 years from the date of sale, or 1 year before the date of sale. That means you can also book in advance. 1 year in advance, that means in 2017 you can pre-book 1 year in advance. So that's the rule number 2. Rule number 3 is that for under construction property, the first 2 are for ready to move in property. That means the property which is already built. For that you have 2 rules. First rule, you can invest up to 2 years within 2020, or 1 year before the sale, that is within 2017, or for under construction property, or if you are going to construct the property, then you have 3 years time period. That means up to 2021. Let me repeat. The property or the profit of 58 lakhs has to be reinvested in another residential property. For that, there are 3 rules. That means 2 years after the sale within 2020, or 1 year before the sale, pre-book or in advance 1 year before the sale, that is 2017, or 3 years for under construction property, or the property if you are going to buy a land or build a property, then you have up to 3 years, that up to 2021. So these are the 3 rules. If you reinvest the amount correctly, then you can escape from tax of paying 12 lakhs for the profit of 58 lakhs. In between the time, like if you suddenly you can't go and invest in a property, right? After selling the property, if you have 58 lakhs as profit, you cannot have it in your hand. So you have to go and invest in a capital gain account scheme. Long-term capital gain account scheme 1988, which is available in all the banks across India. All the nationalized bank, around 28 banks in India. If you go to that bank and ask for long-term capital gain account scheme, you can put that 58 lakhs in that account. You cannot keep it with you in your home or in some other account. You have to keep it in long-term capital gain account scheme 1988 until you reinvest the property. But the reinvestment has to be done within the time period of the rules which I said before. So if you correctly reinvest in a property, another residential property, then you can easily escape a tax of 12 lakhs from the Indian government. Or the main thing here you have to note here is that you can invest only in one property, in one residential property. The 58 lakhs profit has to be invested again only in one property. You cannot invest in 2 or 3 properties. So that's the important thing you have to note it down or have in your mind. Or if you want to invest in 2 property, there are new amendment in this February 2019 from Modi government, where you can invest up to 2 property, but the capital gain limit has to be within 2 crores. If the profit is the maximum profit has to be within 2 crores, you can invest in up to 2 property, but you can make use of that amendment only once in your lifetime. But if you are investing in only one property every time, then you can invest any amount of you can escape from tax from any amount of rupees, even crores and crores of rupees, if you are investing in only one property. If you want to invest in 2 properties, then you can use only once in your lifetime through amendment happened in this February 2019. So if you make use of this rule section 54, you can easily escape from taxes of huge taxes in residential real estate. That's why I emphasize on financial learning or financial education. In FE Square, we specialize in residential real estate. We try not to pay any tax to the government through high financial information or high financial literacy. This tax system was done by British government before independence. Though the same system was copied in Indian tax system, this is not because to make the people to escape from taxes. It's like giving incentives to the people, those who are investing in real estate or any asset, capital asset. If the people are taking initiative and investing in a capital asset, the government is trying to give incentive, tax breaks. So that's why the government is giving to this section 54 or section 54 EC or section 54F or section 80C or section 24. There are huge tax benefits particularly in residential real estate. And also in residential real estate, the beauty of residential real estate is that you no need to pay any GST tax to the Indian government. There are only very few goods left over by the Indian government. For example, milk, fruit, or agriculture tools, or hearing aid tools. Very few things has been left over by the Indian government from GST. Likewise, the residential real estate also has been left over from GST. So you don't need to pay any tax for that rental income you collect every month. If you are having a commercial property, then you have to pay 18% GST tax every month if you are collecting rent. But in residential property, if you are collecting rent, you don't need to pay any GST tax. And also, if you are if you are making use of EMI system from bank, then you can make use of Section 80C and Section 24 for principal and interest. For paying principal and interest, you can make use of Section 80C and Section 54, Section 24. At the end, if you want to sell the property and if you made a huge profit, like the previous example, if you made even 80 lakhs, then after cost inflation index, it's 58 lakhs. Then for 58 lakhs, the tax is around 12 lakhs. You don't need to pay any tax if you correctly reinvest the property. Reinvest on another residential property. If you keep on doing like this, we have done like this for the past 10 years. If you keep on doing like this, you don't need to pay any tax. You just buy a property, hold it for 5 years, invest in another property, take a huge profit, invest on another property, take a huge profit, invest on another property, take huge profit. Likewise, you can keep on going without paying any tax to the government, and also you don't need to pay any GST tax for the rent you collect in residential real estate. That's the beauty of residential real estate. So with this, hope I guess everyone have understood how you can make crores and crores of rupees in real estate and pay zero tax legally to the Indian government through a section called Section 54, which is available only for residential real estate. So before making use of Section 54, always consult your auditor or accountant so that you do it perfectly or without any mistake. So please consult your auditor or accountant before making use of Section 54. So if you have any doubts and queries, please comment in the bottom. I'll be happy to reply to you. Or if you want to make a video on Section 54EC or Section 54F, then I'll be very happy to make a video for you. Or if you have any specific doubt, you can contact me personally through my social media network. Or if you want to consult with us, or if you want to have free consultation with us, check into my website fsquare.in, register your interest. One of our customer executive will give a call back within 24 hours of time. So hope you like this video. If you like this video, please subscribe to my channel or keep watching fsquare for your high financial information. So with this, signing off from here, this is Saunam from fsquare. See you in my next video. Until then, have a good care. Bye-bye.